Hey, what's up, premium chasers? In today's video, I'm gonna be showing you how you can actually sell options, sell calls, sell puts if you are on a limited budget and you have a small portfolio of around $5,000. I've been getting this question a lot, especially on our social media pages, where people don't have like $100,000 plus portfolios where they can start running the wheel strategy on. Well, in today's video, I'm gonna show you why that's not true, why you can actually start getting into selling options, even if you have a smaller account. And not only that, I'm going to show you my favorite three stocks that I love to do with small portfolios. Without further ado, let's get into it. All right, guys. Now, before we jump into it, I just want to let you guys know one lucky commenter down below will win our options strategy call completely for free. One-on-one call with me where we can talk all things selling options. I can walk you through this entire quad option strategy as well as answer any of your questions. Nothing to sell yet at all. Just drop a comment for your chance to win that free option strategy call. But let's get right into this. Today's video is all of those of you that are watching that have small portfolios. You probably only have like 5,000 bucks and you want to get into selling options. You want to start collecting premiums. You want to start, being more active in your portfolio, so to speak. So I'm going to walk you guys through number one, my favorite options to do this on. Two, they're all obviously going to be like budget friendly, and then also entry and exit points for them because these are all stocks that I personally like to use. Even though, like, as your portfolios grow, guys, you'll still like these low cost stocks. I don't know, it's something about opening 100 contracts or 500 contracts just sounds so nice to me. I don't know why it is, but let's go. Let's get into it right away. So the first one we're going to look at, and this one is often overlooked, guys, and that is Ford. I think Ford is a great company. I don't, say what you will about it. I think this is a great company to run the wheel strategy on. And one of the big reasons why is it because it has a great dividend, as a 6% dividend as well, right? So, low cost, stock, it's 9.89. So if a one options contract is 100, right? So to buy 100 shares of Ford is under $1,000 and you collect some premium. So let's jump into the Ford a little bit and take a look at the chart and see if we have any setups today. So you guys already know we start from the watch list, then we go into our Yahoo Finance, and then we go to our brokerage, right? We do our analysis first, generate a thesis around what we're trying to do, and then only then do we go and look at Greeks and the options chain. Okay, I think this is the best way to do it. At least that's what works for me. You do what you want. So I'm going to go click over to the chart. I have my Bollinger Bands already added. So if you need to add them, go ahead and add your Bollinger Band right from here. Okay. And then when you are editing it, make sure you select your 30-day moving average. So what I'm looking at here, whoopsie, is that what Ford over the past 30 days was trading around 996, 997, which is basically where the share price is right now. You could see right in December we were up at close to 11. Looking at the RSI at a 44, so we're pretty flat right here, right? No huge opportunity for a cash secured put or a covered call, but that doesn't mean we can't still do it, right? It's still under the middle Bollinger Band, and it had just hit off the top of the Bollinger Band. So it's worth still going to explore to see what kind of premiums we can actually generate. So let's head over to Robinhood, and then we're going to just type in Ford right here. And we're going to click trade options. We're going to click sell, right? We're selling a put, right? And then we're going to check our expiration date right from here. And I'm just going to go do March 7th, which is 31 days away. And I'm going to see what kind of premiums we can get here, right? Because we want to have like a decent return on our capital here, right? That's the whole point. Essentially, selling options is like you're selling insurance, right? Because there's a buyer on every time you sell an option, there's a buyer on the other end, right? That's giving you that premium, right? So right here we could see 950s, which, if I go and look at like some basic analysis, I want to see like, hey, when was the last time it even was at 950? So it's been a while. It's been a while since it's been at 950. So that might be something that I'm comfortable doing. Let's take a look at the premium. So if that this is what I'm just looking at. I'm looking at 30-day moving average. It was at like 993 or 996. I don't see it at 950 in like a really long time. For right around here, still at 967. Or actually, let's go out a little bit further. Even here, like, it hasn't like 958. So we're still above it. It like literally hasn't hit 950. So to me, it's like, okay, let's see. Maybe this is some free premium I can chase. So right here, we'll click into it. Delta is a 0.35. That's fine. That's fine. I don't mind. Listen, with the quad option strategy, I don't mind a little bit of a higher delta, like in that 30 range, because I don't care if I have to buy the shares. I want to buy the shares because then I'm collecting that dividend. It's a 6% dividend, and then I'm running covered calls against it as well. So to me, for me at least, again, you have to go do your own due diligence. I'm just a guy on the internet. I'm not a financial advisor by any stretch of the imaginations. So I'm just giving my opinion here. But a 0.35, there's a 35% chance of this actually happening. So to me, I'm like, okay, let's take it another step. Let's see what we get here. We're gonna collect $33.96. So just say 33 for the sake of this example, right? We're gonna close. We're just gonna close this out. We're gonna put $33. Our collateral here is going to be 9,500 or $950, right? So we're just gonna put nine. It's so funny, like doing these small ones. $950. Okay, dude, that's very nice. I'm not good at percentages right in my head like that. So I'm a simple man. 3.47 return, and our expiration is actually 31 days, annualized 40. I like it. I like that one. Yeah, I like that. And with a stock like this is where you have to do your own due diligence. But if you have a 5K portfolio, let's say you can swing 5 shares or 5 contracts on this thing, right? In 30 days, that's your 4750 will be used as collateral. You'll collect $165 as cash into your Robinhood account today. 3.147 in 31 days. Now, that's not to say that, hey, we're not going to talk about managing options right now. I do have a free course on the channel that talks about managing. Most of the time, you're closing these out, in 2-3 weeks, which will free up your collateral to run the play more. But I like it. 3.4. So I'm actually shocked that that there's the buyer on the other end for that. Considering Ford's literally not been at 950 in like a year. So that's interesting. That's a good one. So I like it. I like I like it. That's almost some growth stock premium right there. So that's solid, and again, perfect for a small portfolio. If we end up having to purchase the shares, not a problem. We can then run, cover calls. All of these calculators, by the way, guys, these cash secured put calculator, cover call calculator, our live premium tracker, all of this stuff is free for you guys here. I'm here to help you guys out with this stuff. I love, like, my mission is to tell people how amazing selling options is, and I'm not trying to hype this up. This is not a get rich quick scheme, but it is such an amazing way to collect premiums on like a weekly and monthly basis that, like, why do people not know about this? Like, it's so crazy to me, right? Like, this is like insane. Like, it's crazy that they don't teach this stuff to people. But all this stuff is free in our Facebook group. Free, right? That's where we can collaborate, vibe out, share our wins, share our losses, all that good stuff. So yeah, go check that out. It'll be in the description. All those resources will be in the group for you. So not bad for our first stock that we just went over. So let's go on to our second one, and that is Southwest. All right, let's see what Southwest is up to today. Ticker symbol LUV. $30 company, right? So it says a little bit more expensive now. Okay, we're going a little bit more expensive. I still have a couple good ones for you, like Ford. So stay tuned. Actually, I'm going to give you guys one that I really, really like. And just stay with me till the end. I want to share that one because it's very volatile. It's crazy. Premiums are juicy, but I want to show you guys like good ones, like stable companies. So love it. It fits our quad options formula, right? It has a great dividend. So if we get stuck holding Southwest for a little bit, we're running those covered calls. We're collecting dividend. Fantastic. Love to see it. Okay, let's take a look at our chart right here. Looking at look at this. Love it. Love to see it. Love to see it. Under the bottom Bollinger Band, we're trading at 30.48. Our 30-day moving average is $32. We're getting winners right now. $32.75 moving at a 30-day moving average. This is a setup being sold off. It's a 33 RSI. Basically, RSI tells you how overbought or oversold a company is. So at 33, people are selling off, which is driving the company down. Oh, hell yeah. It's below the Bollinger Band. I love when they're like that because like everybody's scared while at the same time it's like us option sellers. Like, I don't care. I'm making money in bear markets. I'm making money in bull markets. I love it. I love it, right? And I'm getting in at prices that I want to buy them at. It's fantastic. All right, let's go. Let's go. Let's go put in our ticker symbol LUV for Southwest Airlines. All right, let's go to trade options. Remember, we're not buyers here. We're sellers. We're premium chasers. All right. Click sell. We're selling a put here. We're just looking at cash secured puts right now, guys. It's I have training on covered calls as well. We'll talk about both. Okay, we'll talk about both. We'll go out our 31 days again. March 7th seems to be our sweet spot right now. Let's take a look at some of these premium. Not as juicy as I was thinking, guys. Not too crazy here. I like this 29. Let's take a look at the 29. 0.28. Not bad. That probably is the that's the wiser way to go, guys. It's the wiser way to go. The IV is not. I mean, it's kind of low, but so let's take a look at what this one 33. Okay. So March 7th. All right, let's toss it into our calculator, okay? So again, this will be a bigger chunk of the portfolio. If we're only messing around with a 5K portfolio right now, this is $2,900, right? So this is $2,900 in collateral. So our collateral is 2,900, right? That's $29 that we'd be times 100. That's how much collateral we would need. We would collect $52 today into our brokerage. 52. Let's see. It's man, that Ford one was just nice. That Ford one was nice. Let's just put this back at one. This is just if you got multiple contracts, guys, and just want a nice high visual explanation of it. So it's a 1.79 monthly return. All right, like it's not. Listen. Basically 2% in a month on your money. Come on, can we all? That's solid. That's damn solid. Let's stop. It's annualized at 21%. All right, not bad. Not a bad play. Not a bad play here at all. We can be a little bit more aggressive, right? Because our delta here is 0.28, and this isn't a bad. Like in my opinion, it's a great company. So let's check a look at this one, right? So that would be if you want to buy it at 30. So you're basically right at the money here. 40% chance of actually happening at delta, but you'd be collecting $83. So again, let's go. Let's see what that does. So that'll up our collateral a bit more to 3K, but now you're at 2.77. This is where you got to weigh your options, guys. Pun intended. This is where you have to weigh your options, right? Do you want to be more risky? Or do you actually really want to get into If you really want to get into Southwest, and you're like, you know what, I want to get in at 30. I want to collect some premium. I wouldn't mind holding this thing at 30 by any means. Then do that. If you're like, hey, you know what, I just want to premium chase. I just want to premium chase, and like I don't mind holding it, of course, but like I really want to get that sweet price. Then go for a lower delta. This is where you have to you have to decide, right, what kind of risk tolerance that you have, right? Great, decent premiums, not bad. Gave two options here, which is fantastic. Let's move on to our next company, which is another airline stock. I've mentioned it on the channel before, and that is American Airlines. It's okay, right? American Airlines is okay. I do actually like Southwest and Ford a lot more because I get that really juicy premium or a juicy dividend from them. But American Airlines also a great company to wheel and deal, baby. Like, let's go. So let's go to American Airlines. Let's click chart, and I do like American Airlines as like a company a lot better than Southwest, so that's why I'll usually trade this one. So let's go over to our I want to see 6-month, 30-day moving average, $17.45, heading towards the bottom of the Bollinger Band, being a little bit sold off. It looks like we were pumping on American Airlines for a bit here. If we look at the RSI, you could see it was basically like 60s and 70s, mid 60s, 70s, close to 80 for the past few months, right? So that tells me, okay, we're coming back to reality a little bit. We're towards the bottom of the Bollinger Band. We recently started to have this retraction here. Definitely more risky. This is definitely like, look, just like as you kind of get used to like trading a certain stock, and that's why I recommend having a watch list of a few companies that you just like monitor. Like every morning, just look at them and you kind of start. I don't want to say you start recognizing patterns because that's like Fugazi talk, but you kind of like you get the vibe of the market. Like I've seen this before. I've seen this play out before. And I've seen this play out with American Airlines before. Okay, I've seen this setup. I would not be surprised if American Airlines comes back down here into the $13 ranges. Like I would not be surprised. I've seen this happen many times with this company. So let's it's having a run. It's 6 months, 73%. Like it's having a run. So like again, this is why you got to be patient and have a watch list, because when you do this basic analysis, you're like, like, do I really want to get in, even if I like have got good puts that I can sell on this thing right now? Like let's say 15. Is it worth it? Like I don't know, but we're gonna go take a look. So let's go to American Airlines right here, and we're going to go to trade options. We are selling puts. We'll go out 31 days, and let's take a look. You never know what's gonna be out there. Look, like 16, like even at 16, I wouldn't want it. I mean, that's the thing. Like, I like this is where you have to kind of do your own due diligence. Look, I woke up today. I got two good opportunities. I see great opportunity with Ford. I see great opportunity with Southwest. I'm looking over at AAL, and I'm just like, look, your gut in this game is going to help you a lot. Like, really trust your gut. Like, especially as you're in it a lot. Like to me, I'm like, I'm not doing this. Like, I'm not. I'm not doing anything with American Airlines right now because it's just I don't have conviction in it. I don't want to own it really at like $15. Like I've seen it under 15 for a stay under 15 for a long time, right? And that's fine. I just like, and my covered call premiums won't be as nice. If I'm at like 15, it drops to 13. I'm only able to run covered calls at like 14.50 and collect very small premiums. I just think it's having a way too big of a run up right now for me. So I'm passing. And see, that's okay. Stick to your plan. That's key in this game. Stick to your plan and be okay with it. All right, last company we are going to talk about. Okay, and this is a fun one, guys. This is a fun one, and that is SoFi. All right, go take a look at this company, research it. I love SoFi. I think this is the future of banking. Um, future, I think there's a lot of opportunity here, and I love this company for wheeling and dealing, baby. The premiums are very nice. So let's go over to our chart. SoFi's having a good run right now. So we're going to just look at the 6 month. We're trading right around 15-day moving average. We're at 1576. Our Bollinger Band, our 30-day moving average, 1576. We're at 1540 right now. So right towards that middle of the Bollinger Band. Again, similar to how Ford was. So, we'll see. It's having a big run up again right now. So again, this is my time. I'm going to tread lightly. I might not open a ton of contracts here, right? This could just be something like, hey, let's just kind of ease into. But you can see there was a massive run up, and now we're starting to head back to reality, right? We're bouncing off that top Bollinger Band. We're bouncing off that top Bollinger Band and coming back down to reality. I wouldn't be surprised if we have a very similar pattern here, right? We were around 1646 and we dropped down to like 14, right? So let's take a look at what SoFi is offering us today. We'll click into SoFi. We're going to trade options. We are selling a put, and let's go out 31 days right here. And very nice. Oh, these are nice. Oh my gosh, this is why I love it. Again, let's look at the 14s. Let's look at 14. 0.25 delta. That's very nice. 14,532 delta. See, with a company like this that is fairly volatile, I would probably go for the 14s, take a little bit less of that premium. So let's run the play with SoFi. We'll go 14. So that's $1,400, right? That's our collateral. Our premium that we're going to collect on this is $43. Put our $43 right here and hit it. That's our sweet spot, baby. That's our sweet spot. We got a 3% annualized at 36. Fantastic, right? And we can, our budget allows us to we can get like 4 contracts in on this thing. 4 contracts at our budget and a little less. So you can mix and match though. You could do 3 contracts with this and then like a 1 or 2 with Ford, right? To fill in that buffer. Uh, solid return. 3% on our $1,400 or on our $4,200 in a month. We collect $129 cash right now, and it's a company if we love and we wouldn't mind owning and then run the covered calls on. Fine by me. Totally fine by me. Guys, that's it for today's video. If you enjoyed it, make sure to hit like, follow, subscribe, all those good things. Don't forget to drop a comment down below as well for your chance to win a completely free option strategy call with me. As always, remember, sell options, collect premiums, repeat. I will see you tomorrow.